Hello, investors. It's Don Vandenbord, Chief Investment Officer with Revere Asset Management. Today is Thursday, January 23rd, 5:24 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Roundup daily market insight video. Market state, we are in an uptrend. You can see the trend gauge over here. We've got 3 out of the 4 coveted green arrows, and if we close above the 50-day moving average tomorrow on the 5 of the 6 indexes that are above there will go to the green arrow there. The only laggard being the small caps can't get above their 50-day moving average. That's one of our keys for tomorrow. We want to keep a watch on that as they've been consolidating for 3 days right below that level. But leaders in grow mode, short term trend, all the major indexes above their 21-day moving average and above the long-term 200-day moving average as well. So what happened today? Market rallying on the back of the inauguration on Monday, and the bulls still running. S&P 500 after flirting with the 6,100 level the last 2 days finally broke through and closing at an all-time high. Here are the numbers: 21 over 21 up an average of 0.8%. 13 up, 2 down, 2 neutral, 6 down. The big 8 up an average of 0.6. RG8 up an average of 0.4. S&P 500 opened red, but trended higher all throughout the day. Ended up with a strong close, up a little over 0.5%, equal weight just below that. We'll take a look at the rest of the numbers when we get to the charts in a minute. The only laggards being equal weight, NASDAQ 100 and mid caps slightly lower. Global 60/40 up 0.33%. Our flagship GROTECTION portfolio up 0.42%. Let's get into the charts. And we'll start as we do with the S&P 500. So things were looking pretty bleak just 7 trading sessions ago. We had broken below the 50-day moving average. We were testing the 20-week/100-day moving average on the S&P 500, but on the 13th, we undercut that level and closed positive. That was day one of the rally. We went, and now that was 7 days ago, 7 sessions ago, sorry, 8 sessions ago. We've now been up 7 out of the last 8 days. And the bulls are running. That's the bottom line. Stan Druckenmiller, legendary investor, was interviewed on inauguration day, and he said he talks to a bunch of CEOs. They're very excited about the state of regulations, for one thing, not having their hands tied by the administration to pursue their capitalist plans. And his expectation was that animal spirits were in the market and we would run higher. And that's what we're seeing so far this year, now being up 7 out of 8 days and straight up off the bottom. Basically, there's a little bit of concern, but we've kind of been concerned in our morning. Not concerned. We always preach riding the wave. Don't sell out of positions too soon, but we want to get our positions on when we start coming off of the bottom, ideally day 4. We did have a follow through type day action when we got above the 50-day moving average on the 17th, and we've just had 3 follow-up days since then. All-time high close. There's nothing bearish about that. I warn you, stay away from anybody that's a doomsayer, that doesn't manage money and have a proven track record. We're completely transparent. We show you every night what we're doing, and all we are is trend followers. We don't argue with what the market is doing. If you latch on to people that are permanent bears, as I like to say, that's the most dangerous animal on the planet. You have missed out on just massive gains in the market over the last since this bull period started in November of 23. We're approaching 50% gains on our flagship GROTECTION portfolio. The time to come to Revere, everybody's account should be near all-time highs. The time to come to Revere is before the next bear market, so you don't have to give back 20, 25% of that, because our rules, and every day in our tail of the tape, we talk about what our estimated balance at risk is right now, a little over 6%. And that just ensures that we lock in the gains that we've made so that our clients can sleep well at night. And we got defensive over in the month of December was supposed to be a bullish month. It wasn't. We got defensive as we broke different moving averages on the indexes, and our stops were hit on our holdings. But when that turn comes, you got to be ready for it, and we've handled it pretty well. So that's the S&P 500, the Nasdaq 100. One of our keys coming into today was this little flag near all-time highs. That's exactly where we are. That's going to be a key tomorrow as well. Not quite as strong coming off the lows as the S&P 500 from a day count standpoint, but that looks extremely well. And actually, the relative strength on the Nasdaq 100 peak last July, you can see the relative strength line peak here. So although the price is higher on a relative basis, the S&P has slightly outperformed the Nasdaq 100 going back to last July. Dow Jones Industrial Average. This is the leading index year to date, up 4.75%. You can see coming up through, had that 42,000 shakeout again 8 days ago. This one actually, 1, 2, 3, 4, 5. Yeah, 8 days ago. And it's just been working its way higher too, as it had a big period of underperformance during the month of December. This is when value stocks were really getting sold. You can see it from a relative basis. The RS line is not near the peak that it made back in mid-November, but the price action is there. And like I said, it is the leading index year to date. Let's look at the equal weight S&P 500. Holding, testing this 50-day moving average. Today's low. We want to see this hold above the 50-day. We've got the 8 and the 21 coming back up on an equal cap basis. This has been acting just fine year to date after a big underperformance during the month of December when the NASDAQ 100 really was the leading index. Let's go to mid caps. Just barely down on the day, the mid caps, but above their 50-day moving average as well. Same setup as equal weight. These two charts really do go in sync, and they're very close. The mid cap 400 and the RSP. And finally, Russell 2000 small caps. This is the one that has been unable to get above the 50-day moving average. If you are an IWM trader, we've got an alert set right above the 50-day on there. We want to see this join the party. We always like it when all the indexes are in sync. And if they continue to run, we'll get the 21 back above the 50-day. Speaking of which, that did break below it. The 21 broke below the 50-day back on January 8th. It's 6 points below that now. And Friday, probably Monday or Tuesday, the 21, if we continue to at least tread water, will come back up through the 50-day moving average. So those are the major indexes. Let's go to some inter-asset correlation. Here's the VIX. 15, anything under a 16 has us very happy. That implies a 1% S&P 500 move. And when the S&P ATR is 1% or lower, the market tends to outperform. We had some volatility. Not the last couple of days, though. Things have tightened up quite a bit on the indexes. How about the dollar? Dollar continuing to pull back, has broken below the 21-day moving average. The slope of the line has rolled over. 50-day moving average coming up to meet that. This pullback in the dollar has also corresponded with the rally in stocks. How does that translate to precious metals? Gold, we've got positions in GLD. We took that last week. We added Nugget this week. That's gold stocks, but showing some positive price action, GLD, not on a relative basis, but this is a very nice flat base that has been setting up here. Let's go to GDX. This is the gold miners index above all the key moving averages. They're not configured the way we want them to, but we tested the 200-day today on gold miners and it bounced off of that. We're playing this with NUGT. That is a 2 times leveraged on GDX. Silver in a tight consolidation. Bitcoin around this 60 level. That's I think around 109,000 on Bitcoin. 4 days of somewhat tight action here after this break above, but pullbacks are getting sold. As long as something is trending above the 8-day moving average, no reason for complaints. Let's go to the broad bond index, BND. Pullback today. Pullback in bond means yields slightly higher, and they were. Here's the long bond TLT that pulled back as well. The 30-year long bond yield popped a little bit off of this 21-day moving average, and the 10-year same setup. That's our inter-asset correlation charts. Let's go to the tail of the tape. And a little bit of news, JOLTS data, that's job openings in line against expectations. Next week, we've got the Fed and a bunch of big tech earnings. It'll be a big week for the market next week. There's some potential to have some these big NASDAQ stocks with a big potential to have a big impact on the indexes. Keys coming into today, S&P against that 6,100 level, finally cleared, closed above it. NASDAQ 100 flag all-time highs, that's still intact. The 10-year yield up slightly, dollar about sideways. Leaders continue to act well. Day count up 7 of the last 8 days, as I mentioned. Action today, intraday, 3 bases, and they all resolved to the upside. Let's quickly look at that 5-minute chart of the S&P 500. You can see sideways base, move up, sideways base, move up, sideways base, move up into the close. I keep a stochastic on this open at all times, so I can just see what the overall trend is. When you get up near the top of this, you're going to pull back a little bit. So ideally, if you're making buys in any stock, because stocks will move in sync with the index, you want to do it when at least this 5-minute is near oversold, or you're almost looking at a surefire pullback if you get it even at the 5 minutes overbought. So something we do in house. Where were we? So on the day, the sectors, all 11 of the spider sectors positive. The leading sectors were ITA or DFEN, that's aerospace and defense, as GE Aerospace had a positive reaction to earnings. Biotech, XLI and V, that's industrials and medicals, led to the downside. Semiconductors, much weaker at the open, but they paired most of those losses by the close. Banks and gold stocks down mildly. 2 changes to the portfolio. We got stopped on Alab. Actually, we got shaken out on Alab. We'll look at that chart in a minute. And added to Reddit on pullback. So our RVAB, Revere Volatility Adjusted Beta, 1.51. So basically 1.51 times a fully invested S&P 500 portfolio. This is how we track our overall exposure to the market. Your cash percentage is not as critical as your exposure is. And the volatility and the beta of the stocks that you own. Rebar, Revere Estimated Balance at Risk. This is if all of our stops were to be taken out, 6.31% to the downside. Bottom line for the day, the bull run continues. S&P 500 now up 6 out of 7 days and hits an all-time high. The keys for tomorrow, S&P, we want to hold that 6,100 level on any pullback. NASDAQ 100 flagging near all-time highs. Keep an eye on that. And can the Russell 2000 get above the 50-day moving average, which has been acting as resistance? Let's get to some charts. We'll start off first of all with Alab. Now, not upset to get shaken out of this. We initially got into this on this gap up day here, October 9th. They announced a new product up on volume, and we've had probably about 12 buys and sells since then, but we've cashed a lot of gains on this on the way up. The most recent prior to today was 100% gain on a portion of the position on a shake below the 21-day. A couple of days ago today, look at the 5-minute chart here. This was ugly. It gapped down. It made lower lows. When it gapped below the 50-day and there was heavy volume, we were out of this by 10 o'clock in the morning, and it just proceeded to shake us out. No big deal. The last piece, 84% gains. I'm not upset about that. What we look for now, this is a bullet. This is a shakeout. This is a hammer candle. A lot of people had stops below the 50-day moving average. This was our runner, our last sell of any position that we take. We like it to be a defensive sell to let it ride as far as it wants to. So that last piece closed today. Now what we want to look at is this a candidate to be rebought? Well, it's still in the 21-day moving 2121 list. If it's not above the 21 by the end of the week, it'll be punted. But when it comes into declining overhead moving average support, in this case, the 8 EMA and the 21, we want to see how it reacts. One of the reasons why I sold it today is because um, when it bounced at the 50-day 2 days ago, that's perfect action. It came up to the 21 yesterday and it failed there on a day when all tech stocks were pretty much rallying. So that was a sign of some weakness, and you'll note the relative weakness on this over the last 2+ weeks. We're always keeping an eye on that. The strongest stocks are above their 21-day moving average. And then the shakeout below the 50, if we'd waited till the end of the day, we'd still be in that last runner position, but no big deal. There are plenty of leading stocks that are setting up nice and at low risk buy spots. So that's the story on ALAB. Let's take a look at everything else that we own in the GROTECTION portfolio. We added to Reddit today on the pullback and the bounce off of the 8-day moving average. Bros, we added to yesterday. This is going sideways very nicely for the past 2 weeks. AVGO bounced at the 8 EMA today. Marvell bounced at the 8 and is near all-time highs. EQT, we sold this yesterday on the negative reversal when it was extended +4 ATR. We do this frequently when things just get extended. Book the gains. You're more than I considered doing it back here. It touched the +4 ATR, touched it again yesterday. Considered doing it back there, held on to it. The second time in the negative reversal, I just sold 2/3 of the position. So we're holding on to a runner in EQT. A lot of oil names have been acting very well. Um, and that's just how we do offensive selling frequently. DEV continuing to make just a very strong stock. Very nice, making all-time highs again. Tesla hanging right around the 8 and the 21, not showing any real relative strength, but holding on to this 400 level with earnings next week. VST reversed at this Livermore 200 level today. Very strong in one of our top three positions. There's gold. We already looked at that. NVIDIA, we added this yesterday. On the volume, when it reclaimed this cluster of moving averages, gives a very clear stop with the cluster of moving averages there. But then again, that's what I thought back here when we added it. We got stopped out of that. But no problem. This is, and really, NVIDIA has not shown any relative strength against the S&P 500 going back to June. You can see where it peaked here, and the price is basically in the same place that it was. So um, we have a lot of long-term gains in this, around 200, 400% for some clients in taxable accounts that we just don't want to ring the tax bill up yet. So we hedged it when it was under there. We took the hedge off when it reclaimed these moving averages. We do that with legacy positions frequently. And then I talked about Alab. So that's going to wrap it. As always, like to hear from you. The email is don@revereasset.com. The phone's 855 Real Wealth. That's 855-732-5932. If you're interested in becoming a client, email my partner, Dan Stewart, dan@revereasset.com. He's the touch point for all onboarding and assessing. There's a rule. We've got to know our customer, and Dan is the guy that takes prospects through that process. Some people are not suitable for most people we are, and people that are with other advisors very frequently give us a portion of their assets, and then we've seen it a lot this year. The rest of it ends up coming to us as well. Why? Because we're transparent. We tell you what we're doing. We take full accountability for it, and we protect the downside, as one of our clients calls it. We're their SWAN, which stands for sleep well at night. It's one of the reasons why we started this firm. We're very proud to share our formula with our clients and people that follow us on these videos. And with that, I'll wrap it for Thursday, January 23rd. This is Don Vandenbord with Revere Asset Management, telling it like it is. Thanks for listening and have a great day.